The work from home movement that boomed during the pandemic is really starting to come to an end now, as companies are not just asking but demanding their employees come back into the office right now. Now, of course, some companies have seen some backlash from demanding their employees to come back. Like when Amazon demanded their employees to come back, some employees held strikes at their office, some employees walked out of the office, but Amazon really didn't care. They said, okay, if you don't want to come back into the office, just never come back. You can leave. You can leave the company permanently. Same with Google. When Google demanded their employees to come back, there was some backlash over there, but Google said the same thing. We are committed to bringing people back into the office because we need people to be more productive. We found that collaboration is much better in the office, so we need people to come back. Now, naturally, there are some people that are very upset about this. People meaning people who now have to go back into the office. Some people are upset because now I can't take care of my kids like I could before. I can't spend with my time with my family like I could before. I got to spend more time in traffic. And some people are upset because, well, they're working virtually as it is. They do all their work on a computer. They do all their calls on Zoom. They just have to do it in the office. But there is benefit to being in the office, because now when you're in the office, if somebody has a question, they can come directly to your desk instead of having to just Slack you. And this is where now companies are having to make adjustments based off of what's happening in the economy. Because what we're seeing right now is obviously inflation is around. It's making people's spending ability drop, right? Because when the price of your rent and your groceries are so much higher, you have less disposable income to spend on other things. And when people have less disposable income, they have to be more cautious and careful with where they spend their money because they have less money to spend, which means certain businesses are seeing less dollars coming through their doors because less people have the ability to spend. So now businesses have to get very productive because now they are looking at their operating costs. They're looking at the revenues and they're saying our revenues are not growing like they thought. Our operating costs are growing. And now we need to make our operating costs more effective, meaning either we need more work out of each employee, we need better work out of each employee, or we need less employees. And this is where now many businesses across the board, it started off with just tech, and it was kind of funny when we started seeing layoffs in tech. This started in 2022. When the tech layoffs started happening, everybody, not here of course, but most of the traditional media kept saying that this is isolated to tech industries, that no other industry is going to struggle, that it's only tech businesses that are struggling. Today, we're starting to realize it's not just tech. Obviously, tech is one of the hardest hit, but it's not just the tech industry. But now what we're seeing is businesses across the board are saying we have to make these adjustments, and they're asking employees to come back into the office because now each company is needing more productivity out of their employees, because what they're finding is the productivity when people work from home is generally less. Is that 100% of the time? No. There are some people that are more productive working from home, but the majority of people statistically are less productive when they work from home. So now companies who are looking at their financials are saying, we have to turn things around. Otherwise, we're going to be out of business in 18 months or 24 months or 36 months or whatever it might be. And so now they're saying, we got to get people to be more productive. We need more work out of each employee. And that's where now employees are saying, either, okay, I get that. I'm doing whatever it takes to grow the company. I'm going to come back to work. Or they're saying, I don't want to do that. And it's a real shift in dynamic, because now what's happening is the economy is slowing down, which means the job opportunities out there are also starting to shrink. And so companies are saying, okay, if you don't want to come back into the office, just never come back. That's okay. They're looking to reduce their staff size anyway. So if you want to leave voluntarily, it makes the job even easier for the company. So if you don't want to go back into the office, find a different company that will hire you. Companies are embracing that now because they need less operating costs and they need more productivity out of each person, because now when you enter a time where the economy is slowing, that means revenues are falling. Companies have to get more productive. They have to get more profit out of the business, because when times are good, money is growing, growth is there, you can do whatever you want. The reasonableness as to what an employee can do is really whatever, because the company is making money. But when you start to see that shift, well, that's when the companies demand more. And over the last number of years, the power was really held in the hands of the employee. We did a full deep dive on this in Market Briefs, my free financial newsletter, which is why if you haven't joined Market Briefs yet, I highly recommend you do so because it's an easy and free way for you to stay up to date on what's happening, when it's happening, that way you don't get blindsided by the economy. And if you haven't joined Market Briefs yet, you can go to briefs.co/market. That's briefs.co/market, or you can click the link down in the description below. But this is where now the shift is happening, where 2020, 2021, and even into 2022, the power was in the hands of the employee. Employees were pretty much in full control. Now we're starting to see that dynamic shift. It has not completely shifted yet. We're still seeing a lot of power in the hands of employees today, period. That is 100% true, because there's still today way more job openings than there are employees, period. And I'll talk about why in just a second. So employees still have a lot of power, but we're starting to see more and more of that dynamic shift. And if the economy continues to go in this downward direction, if we continue to see high inflation, you're going to see this shift happen even more aggressively, where the power will shift then to the hands of the employer. And the reason now why we're seeing this shift is just naturally because of, well, the whole changing tides in the economy. The Federal Reserve Bank is working now to bring down inflation by raising interest rates. These higher interest rates mean that it's more expensive to borrow money. And if you're a business, your debt costs have risen because businesses don't have 30-year fixed rate mortgages. They have adjustable rate mortgages. And so now when you have a lot of debt on your balance sheet, you have a lot of debt on your books as a business, this debt is going to readjust at a higher interest rate, which means your costs go up, in addition to the inflation making your costs go up. So now as a business, you have higher costs and revenues are not growing because the economy is slowing. And so now you're having to make these decisions. And the reason why businesses are really struggling is because of how fast businesses boomed in the last number of years. See, in 2020, 2021, and even in 2022, there was a ton of free money. And we saw this in stimulus checks and unemployment checks, but it wasn't just for people. Businesses were also getting tons of free handouts from the government. They were getting free loans. They were getting free grants. There's a lot of free money going to businesses. And so now when you're a business and you get all this free money, what are you going to do? You're going to want to expand. You're going to want to grow. You're going to open new industries. You're going to open new operations. You're going to hire more people. You're going to open more stores. You're going to open more manufacturing plants. And this created a huge boom, which also resulted in way more job openings because businesses had the ability to hire. But now that is changing. We haven't seen the full effect of the higher interest rates yet, but we're starting to see this change, where now that free money is going away and businesses are now having to make profit of all the growth that they had. And a lot of businesses are now saying, we don't have the capacity to manage all this growth, all this hiring that we did in the last few years. So now we need to downsize. And that is starting to shift the tides. Now, this is where a lot of people have opinions as to how much the tides will shift. Some people are saying it's just going to be a mild pullback. Some people think it's going to be a lot more severe. Some people say there's going to be no pullback. But this is what's happening right now. The higher interest rates are shifting the tides in the economy. There's no more free money like there was before. The grants are starting to go away. Debt costs are starting to rise. We're going to see more and more debt costs rise over the next 12 to 24 months. But that's where now we're going to see a real shift. And along with that is going to be the shift in the power of the workplace. In the last 3 years, it's been in the hands of the employee. Now we're starting to see that start to shift. It hasn't completely happened yet, but we're going to see more and more of that shift as the economy continues to hurt. If the economy continues to hurt, if we continue to see this slowdown in the economy, there's going to be a bigger shift. And that's going to cause a lot of changes in the workforce. And if people don't want to go back into the office and they're not willing to work, well, you can do that when you have other job opportunities. If you have another place where you can work from home, great. If you have another job opportunity, or if you have savings or you have investments that you can fall back on, great. You have the money and the wealth to do that. You have that power to do that. But when that other opportunity goes away, or when you don't have the money to fall back on, that's when you'll start to really see that shift. So what does this mean now? Well, if you're an employer, you better get serious with your business and your operations and make sure you're running lean, make sure you don't have a bunch of operational costs, and make sure your productivity is still high. Period. You don't have any other option. If you're an employee, understand the shifting tide. This is going to be happening over the next 12 to 36 months. You're going to see a lot of shifts in this. And you can hate it. You can hate me for telling you this. Look, I'm not here to make friends. I'm just here to help you be better with your money. I'm just telling you what's going on. But in the next 12 to 36 months, we're going to see more and more shifts with this happen. So if you are an employee, understand that this shift is happening on the employer side. And if you need the job that you're in right now, the common trend right now is if somebody doesn't want to come back into the office, you're going to be the first one to go, period. And so understanding that and figuring out what type of lifestyle you want, what type of job you want, and what type of career you want, and if the job that you're at right now is going to provide that. So just be honest with what's happening, understand it, and then make a decision based off of that, and understand that, the work from home culture is changing. And if you want the ability to be hybrid, you're going to have to now prove it even more. And you might say, but Jaspreet, I'm already working hard. I'm doing this, I'm doing that, and I don't want to work hard. Look, if you want your company to let you work from home a couple of days a week, you're going to have to prove it, because in the business's perspective, productivity is going to become essential for each employee. And if you cannot show that, they're not going to be able to approve it. This is the situation that we're in right now, and that's why I want you to understand this. That way you can be proactive and take the best care of yourself. That way you have the ability to take care of yourself, your family, and your community, right? Because if your company's struggling, they're going to make certain decisions. And you want to know what factors and criteria they're going to be looking at when they make these decisions prior to that decision being made. That way you can make sure that you are protecting yourself. Now, does this guarantee you're going to protect yourself? No. But these are the factors that companies are looking at. An employees' productivity and ability to come into the office are now crucial. Google talked about this. The CEO of Google said that in the coming productivity meetings with employees, one of the things they're going to look at is how many times the employee signed into the office with their badge. These are going to be things that are discussed in their quarterly or monthly meetings with their superiors. So yes, tides are changing. It's not just tech. It's going to be happening in other industries. So understand this. Know what's going on with your company. Obviously, every company is different. Every person is different. But understand what's going on. That way you don't get blindsided by what's happening, and you can be proactive and take the best care of yourself, your family, and your community. If you want to be a successful investor, there are 10 mindset traits that every successful investor has that I'm going to go over in this video. And number one, if you want to be a successful investor, avoiding the shiny object syndrome. Now, when I say shiny object syndrome, I don't mean now you take your money and you go out and buy fancy cars and nice things, because that's the attractive thing to do.